Loading, and it's shaking up even the biggest players in the industry.
Absolutely. It's a wild ride, honestly, and
Yeah.
it's constantly reshaping how we think about innovation.
It truly is. And today we're cutting through all that buzz to really zero in on a titan that's been, well, a foundational presence for decades, yet is making some incredibly significant waves right now.
We're talking about Oracle Corporation, right? Ticker symbol ORCL.
That's the one. Our mission for this deep dive is to give you a comprehensive, a well-informed understanding of Oracle's current position as an investment. We're going to unpack its core business, its financial health, competitive advantages, and those crucial factors driving its future.
Yeah, we've pulled together the most important insights from recent reports, news,
Mhm.
looking at key metrics, analyst views, their latest strategic moves.
It's all about getting you up to speed quickly and thoroughly on Oracle.
And just for context, as we record this today, June 18, 2025, Oracle stock is trading at $208.18 USD. It had a daily change of minus $2.92, or about minus 1.38%. So that's our starting point.
Okay, let's unpack this giant. Oracle's been around forever, almost a fixture in the enterprise world. But for someone looking at them now, what's their real bread and butter? What makes them tick today beyond just being the database company?
Well, at its core, Oracle provides a massive array of products and services, all designed for enterprise IT environments, worldwide. Think of them as the digital infrastructure provider for large organizations.
So not just one thing, but a whole suite of solutions. Can you give us the quick rundown on those core offerings? Like, what are the main buckets?
Absolutely. So at the top, you've got their Oracle Cloud Software as a Service, or SaaS, suite. This helps businesses run pretty much everything. Back office finances with ERP, enterprise resource planning.
Right, the big stuff.
Exactly. Also managing their entire supply chain, human resources, even customer interactions. Think of it like a one-stop shop for an enterprise's digital operations. That includes things like NetSuite, which they acquired.
Okay, so helping businesses run end-to-end, all in the cloud. What about the tech underneath all that, the infrastructure?
Right, that falls under their cloud and licensed businesses infrastructure technologies. This includes the fundamentals, cloud-based compute, storage, networking capabilities that Oracle now provides. It's OCI, Oracle Cloud Infrastructure.
OCI, okay.
And it's also where you find key products like Oracle Autonomous Database, MySQL HeatWave, and even newer tech like Internet of Things, blockchain services.
Oh, and Java. Is that still them?
Oh, yeah. And of course, Java, the software development language everyone knows, along with various middleware solutions, it's a
Yeah.
huge footprint.
Java. Many people might not even realize that's Oracle. That's massive. And I imagine for these huge enterprise clients, they're not just selling software licenses, but actual hardware too, right? Servers, storage.
That's spot on. They still offer hardware products and services. That includes their Oracle engineered systems, enterprise servers, storage solutions, often tailored for specific industries, plus virtualization software, operating systems, management tools.
And I bet they help install it all too.
Definitely. Crucially, they offer extensive consulting and customer services to help businesses implement and manage all these complex systems. They don't just sell you the tools, they help you build the house, so to speak.
Makes sense for big clients. So who are they selling to? Just big business.
Primarily, yes. Oracle markets and sells directly to businesses across various industries, government agencies, educational institutions globally. They also use indirect channels working with partners.
Yeah.
And yeah, founded way back in 1977, headquartered now in Austin, Texas.
Got it. Now let's turn to the numbers because this is where Oracle's story gets really, really intriguing. We're looking at a company making massive bets, and the financials are where those show up. What's the headline from recent performance?
Well, looking at the trailing 12 months, the TTM figures, Oracle reported substantial revenue, $57.4 billion USD. Net income came in at $12.44 billion.
Okay, solid numbers.
Their TTM earnings per share, EPS, is $4.34. And the forward EPS, what analysts expect, is projected higher at $6.77. So that indicates expected growth.
Okay, pretty solid top line. What about valuation ratios? How's the market valuing this performance and I guess their future prospects?
Their price to earnings, the PE ratio, is 46.93 on a TTM basis. The forward PE is lower at 30.73. Their price to sales, PS, is 10.17 TTM and 8.75 forward.
So those ratios suggest the market is definitely anticipating significant future earnings growth, right? Especially that forward PE being lower.
Exactly. And for investors looking at income, Oracle offers an annual dividend of $1.07 USD, which works out to a dividend yield of about 0.82%.
Okay, now here's where it gets really fascinating, maybe a bit of a head scratcher for some. Let's talk cash flow. There's something here that really stands out for a company this, well, mature?
Yes, this is a critical point analysts are watching very closely. While Oracle's operating cash flow looks robust, it's $20.82 billion.
Sounds great.
But their capital expenditures, their CapEx, are a significant negative $21.21 billion.
Wait, negative more spending than operating cash flow?
Precisely. This leads to a negative free cash flow of minus $394 million. And that translates to a negative free cash flow yield of negative 0.07%.
Wow. Okay. Negative free cash flow for a company this size. That's going to raise some eyebrows. Is this like a necessary evil for growth in their sector right now, or could it signal something else? How should we interpret that?
Well, it clearly signals massive ongoing investment. For Oracle, it means they are spending more right now building out infrastructure, primarily their cloud data centers for OCI and these big AI workloads, than they are generating from operations after you account for those investments.
This is a huge bet. It's a high-stakes gamble. You often see this in hypergrowth startups, right? Not typically in decades-old titans. The market seems to be betting this will pay off long-term, but it definitely highlights their current risk profile and immediate cash needs.
And I guess that explains the debt.
It links directly to their total debt,
Yeah.
which has climbed to $104.1 billion. They do have about $11.2 billion in cash and short-term investments on hand, but the debt load is substantial.
So, leveraging up significantly to fuel this expansion. Okay, despite the negative free cash flow, what about their core profitability margins? Do those tell a maybe different story?
They do. Their profitability margins are strong in other areas. Gross margin is very healthy at 77.82%, and operating margin is also strong at 30.80%.
Okay, so the core business is efficient.
Very efficient. But that negative free cash flow margin of negative 0.69%, again, just underscores the sheer scale of investment currently going into building out future capacity. It's all about that OCI build-out. Right. So impressive gross and operating margins, but that FCF margin tells a very different story about cash generation after CapEx. What's the outlook then? What do analysts see coming from all this investment?
Well, analysts project pretty substantial revenue growth from an estimated $57.4 billion this fiscal year, 2025. They expect revenue to nearly double to about $107.5 billion by fiscal 2029.
Double, wow.
Yeah, and correspondingly, EPS is projected to grow from the current $4.34 to $12.58 over that same period. These are, very aggressive growth forecasts. They're essentially predicting a massive payoff from this current heavy investment cycle.
Okay, so we've got a company with strong historical profits pouring money into future growth, betting big. That brings us to their competitive position, their moat. What's Oracle's economic moat rating? What does that actually mean for them?
Oracle's economic moat rating is classified as narrow. Basically, this means they do possess competitive advantages that help protect their profitability, but they also face significant and, frankly, very well-resourced competition. It's not an impenetrable fortress, but they definitely have built-in defenses.
A narrow moat. So good defenses, but they're definitely in a fight. Where do these advantages come from, specifically? What makes their moat narrow, not wide, or non-existent?
A key source is Oracle Cloud Infrastructure, OCI, and its technical differentiation. OCI is really designed for high performance, particularly for demanding workloads like, you guessed it, AI applications.
Ah, the AI angle again.
Exactly. This makes them a strong contender in the cloud space for specialized, intensive tasks needing raw power. It differentiates them from some of the more generalized cloud offerings out there.
That makes sense, especially with the AI boom demanding so much compute. What else gives them an edge?
Their strategic multi-cloud approach is another big one. It's quite unique. Offerings like Oracle Database running in Azure and their planned Google Cloud connectivity.
So playing nice with others.
Sort of, yeah. It reduces friction for customers who might want Oracle's database or other services, but are already heavily invested in, say, Microsoft Azure or Google Cloud. It really expands their addressable market because it doesn't force an either a choice on customers.
That sounds like a really shrewd move. If you're a large company, you probably have workloads spread across different clouds anyway. So how do they keep customers once they're in? Is it sticky?
Oh, very sticky. That comes from high switching costs. Oracle has this massive installed base of enterprise application customers using their Fusion ERP cloud and NetSuite Cloud ERP.
Right, the core business software.
Exactly. These are deeply integrated systems central to a company's operations. Migrating away from them is incredibly complex, time-consuming, and expensive. That creates strong customer lock-in.
Makes sense. So customers are really locked in. How does that translate to their future revenue outlook? Does it give them stability?
It leads to strong revenue visibility. They have record remaining performance obligations. or RPO.
Hmm.
This is basically contracted future revenue that hasn't been recognized yet,
Like future guaranteed income?
pretty much.
Yeah.
And it indicates a stable and growing future revenue stream, especially as more workloads transition to their cloud.
Okay, that sounds like a strong position, especially with those high switching costs. But you mentioned the narrow moat earlier, implying challenges. What are those, given how tough this market is?
Well, the primary challenge is simply that the cloud market is intensely competitive. You've got massive, well-established players like Microsoft, Amazon, Google,
The hyperscalers?
the hyperscalers, exactly. Sustaining Oracle's position, let alone continuing to grow market share, requires substantial ongoing investment. And this links directly back to those huge capital expenditures we discussed. They have to pour money into building out their global cloud footprint just to keep pace and try to gain ground.
So, their strengths are clear, but so are the immense demands of the market they're in. Okay, let's look at the two sides of the coin. What are the main bull arguments for Oracle, and what do the bears say? Why are some people optimistic?
On the bullish side, analysts are really excited about accelerating cloud growth, fueled by AI. OCI's rapid expansion seems primarily driven by this surging global demand for AI training infrastructure.
Makes sense.
Oracle's differentiated AI supercluster technology and strategic partnerships seem to position it very well to capture a significant chunk of this high-growth market.
So, if you believe in the AI infrastructure boom, Oracle is potentially a good way to play it.
Right.
What else are the bulls pointing to?
The strategic multi-cloud differentiation is a big one for the bulls. They believe Oracle's unique approach, reducing customer friction, expanding its market, is a strong competitive advantage that will drive adoption long-term.
Okay.
Also, that strong future revenue visibility from the record RPOs we mentioned, especially those tied to long-term cloud and AI contracts, provides a clear pathway for future earnings. Bulls love that visibility.
So, committed revenue for years to come. Any other growth avenues the bulls highlight?
Yeah, bulls also point to expanding applications and vertical markets. They see continued steady growth in Oracle's cloud applications, Fusion, NetSuite ERP, coupled with long-term potential from strategic investments in specific industries, particularly healthcare with their Oracle Health platform, formerly Cerner.
Okay, that paints a pretty optimistic picture. AI tailwinds, unique strategy, locked-in revenue, new markets. But every story has two sides. What are the bear analysts cautioning investors about? Where are the potential pitfalls?
Well, the biggest concern for bears is absolutely the significant capital expenditure burden. The massive investment needed to build out OCI capacity for AI demand is dramatically increasing CapEx.
Which hits free cash flow.
Exactly, which, as we noted, significantly impacts free cash flow in the short term. This requires a lot of cash, which they are currently borrowing heavily for, raising questions about debt sustainability if that growth doesn't materialize as quickly or as profitably as hoped.
So that negative free cash flow isn't just a footnote, it's a major red flag for the bears. What other challenges do they see beyond just the financial drain?
Bears also point to execution and integration challenges. Integrating huge acquisitions like Cerner and successfully executing these complex, large-scale government healthcare deployments they're chasing. These carry inherent risks.
Right, these aren't easy projects.
Not at all. They require substantial ongoing investment, intense management focus, which could potentially distract from other parts of the business.
And all that spending could squeeze margins, right? Is there a risk that growth comes at too high a price, at least in the near term?
Precisely. There's potential margin pressure from this heavy investment. While the spending on OCI and other growth areas aims for long-term returns, it could certainly pressure overall operating margins in the near to medium term before those economies of scale fully kick in. Basically, spending a lot now might eat into profits for a while.
Makes sense. And finally, what about external risks? Stuff outside Oracle's direct control.
Bears definitely worry about reliance on the supply chain and other external factors. Scaling OCI heavily relies on getting critical components like GPUs, especially with the AI boom. That exposes them to potential supply chain constraints or price hikes.
It's like the chip shortages we've seen.
Exactly. Plus, external factors like cybersecurity risks, always a concern, and potential government spending scrutiny could also pose challenges, especially given their aggressive push into the defense sector. Budgets can change.
Okay, so a classic growth story. Significant investment needed, but also significant potential reward, with clear risks on both the execution and external fronts. Let's shift gears to some very recent catalysts and investor insights that have been making headlines. What's the absolute latest news moving the needle for Oracle?
Well, just on June 17th, we saw some pretty big news on AI partnerships and deployments. XAI, for instance, selected Oracle Cloud. They'll offer their Grok models via Oracle Cloud Infrastructure's generative AI service.
Grok on OCI, interesting.
Yeah, OCI will be used for both training and running the next generation Grok models.
Yeah.
And related to that, Oracle also announced they're adding AMD GPUs to their cloud infrastructure.
Right.
That's crucial for handling these demanding AI workloads and gives customers more hardware options.
That's a big AI validation. And they're clearly not just focused on private enterprise, are they? I saw a flurry of news about their push into government and defense.
Oh yeah, a real full-court press there. On June 17th alone, several major announcements highlighted their defense and government initiatives. They launched the Oracle Defense Ecosystem, a global initiative aimed at tech innovation for defense.
Okay.
They also introduced Oracle Compute Cloud at Customer Isolated. That's a secure, sovereign, kind of air-gapped cloud service specifically designed for classified government workloads.
Air capped. Wow. High security.
Very high security. They even partnered with Nextcloud for collaboration tools on OCI for governments and enterprises, and another company, ORCL, joined their defense ecosystem. It's a very targeted strategic expansion into these highly secure, high-value sectors.
Sounds like a major strategic thrust. What about their broader healthcare play stemming from Cerner? Is that still moving forward?
Absolutely. Beyond government, Oracle continues its healthcare expansion. They recently announced the general availability of Oracle Health Community Care. This is basically a cloud-based mobile extension of their electronic health record system.
So, taking EHR mobile.
Yeah, designed to improve care delivery in mobile settings, home care, rural areas,
Yeah.
basically broadening the reach of their healthcare tech beyond just the hospital walls.
Okay, those are all major operational moves. From an investor perspective, we also need to glance at insider trading. Anything notable recently from Oracle execs?
Yes, there was some activity. On June 12th, 2025, Jeffrey O'Henley, Oracle's vice chairman, had some notable transactions. It involved M-exempt transactions, basically stock options being exercised at a much lower price, like a purchase.
Right, the strike price.
Exactly, at $40.36 per share. And then S-sale transactions, which are direct sales on the open market. He acquired 400,000 shares via those options and then immediately sold almost all of them, 390,307 shares, at prices around $190 to $191 per share.
So exercising options and cashing out a large chunk, pretty common for executives, right?
Yeah, it's a very common way for executives to monetize their stock-based compensation. Significant volume, but the pattern itself isn't unusual.
Okay, good context. Finally, let's talk about where analysts see the stock going. What are the latest price targets, and how do they stack up against the current price and maybe fair value estimates?
Well, recent analyst actions show some optimism. JMP Securities raised its price target quite significantly to $240 on June 12th. Morgan Stanley also raised its target, though less dramatically, to $175 on June 9th.
Big difference between those two.
Yeah, quite a range. If we compare these to Oracle's current price, around $208, the general consensus fair value estimate is around 176 cents, and our own internal price target calculation puts it around $192.34. For more context, the analyst's average price target over the last 6 months is lower, around $168.47.
So recent upgrades are pulling that average up, reflecting maybe increased confidence in the AIOCI story, but there's still a wide spread in opinions.
Exactly. It really indicates the uncertainty around the timing and magnitude of the payoff from these massive investments.
What a fascinating journey through Oracle today. So wrapping this up, what does this all mean for you, the informed investor? We've seen Oracle as a company making really aggressive, capital-intensive bets in incredibly high-growth areas like AI and specialized government cloud.
But at the same time, we've definitely noted the significant short-term impact these huge investments are having on its free cash flow. It's a balancing act.
It's truly a complex picture, isn't it? Highlighting a company in a major transitional phase. They're leveraging their established enterprise base and tech know-how to capture these big emerging opportunities, but it's definitely not without considerable cost and, frankly, risk.
Absolutely.
So as you consider Oracle's future, maybe think about this. To what extent is the current market valuation, around 208 towers, already pricing in the success of these massive AI and defense investments? Are they getting credit for it already?
And perhaps how and when might Oracle's significant capital expenditures start to translate into positive, maybe even strong, long-term free cash flow generation? That could really change the financial narrative, right? From heavy investment back to robust cash returns.
It's a fascinating question, and one investors will definitely be watching very closely as Oracle continues down this path. This really is a great case study in how these long-established tech giants adapt and make bold bets to stay relevant and competitive.
Couldn't agree more.
Well, if you found this deep dive valuable and want to stay ahead of the curve on companies like Oracle and many others, please make sure to subscribe to our channel and definitely hit that bell icon.
Yeah, your support really helps us keep bringing you these in-depth analyses. Thanks for tuning in.